Time for 3 versus AJ, and we're talking about slowing manufacturing around the world. Today we've seen drops on manufacturing in both India and China. Meanwhile, over in the UK, similar story. The Eurozone manufacturing, by the way, its lowest level in 3 years. There's a lot of pain in the world. There are the numbers. They speak for themselves. They're all moving the wrong direction. And, of course, right here in the U.S., we are growing, but just barely. And also, by the way, look at the direction. It, too, is falling. That would appear to be a problem, and yet not necessarily, say, our next 3 guests. In today's 3 versus AJ, we want to try to figure out how you place some of the stocks behind these numbers. Might these trends reverse? All right, we've got Todd Schoenberger on the fundamentals. We've got another Todd. He's Todd Horwitz, watching the charts. He, of course, we usually talk to on the options front out in Chicago. And Phil Silverman has the options trade for us out of New York. Guys, thanks for all being here. I tell you what, Todd Schoenberger, let's start with you, because you've actually been a guy who's been playing this market short, and yet, what, there's potentially some opportunities on the manufacturing side?
There clearly are, but when you look at this sector as a whole, I mean, it's clearly going to be the prettiest girl at the ugly girl dance right now. So moving forward, if you look at some select companies that are within that sector, they will do well only because of global growth, and there are some winners that are there.
All right, give us a couple of examples.
Well, John Deere is a great example. I mean, here's a company right now, you talk about equipment sales, they're expecting 75% growth, or I'm sorry, 25% growth in the third quarter of this year. But look at the corn. If you look at the agriculture department, they're predicting 75% increase in corn out of the Midwest. That's great for the farmers. They're just buying more of this equipment. It's a great stock.
Yeah, certainly more corn production. Of course, there's not been a whole lot of rain out in Kansas. That's part of the problem. The USDA just downgraded the wheat crop, the winter wheat crop in Kansas. All right, Todd Horwitz, you're out there in the mid-continent. Why don't you talk to us? Start with John Deere. What's your take?
Hi, AJ. Thanks for having me back. John Deere, I think that John Deere picked the top of the market, and I think now it's got a good opportunity to pick the bottom. I like it down here. I think it's coming to a nice support area along with Caterpillar. I think those are both coming down to support. I think these are an area that we can take a chance. We're in an overall downtrending market. These were higher first. They came down first. They're now coming up, and I think we have a chance to reverse off of here. And this could be the 2 stocks that could lead the market back up to some positive territory. But you got to be nimble here. We don't want to get too over long here, and we better be ready to get out when they get up to some new levels up at resistance.
Yeah, that also argues for a tight stop. Hey, Todd, just real quickly, Caterpillar, and I should say Todd Schoenberger, our fundamentals guy, Caterpillar is trading below 8 times. That's historically very cheap, isn't it?
Yeah, it is. It definitely is. And there's a great company itself within that sector, something to definitely consider, especially when you look at emerging markets and that type of growth.
All right, Phil Silverman, options trader, you're down at the New York Stock Exchange. Give us some sort of trade here. Well, first of all, do you agree with these guys that Cat and Deere might be fit for a bounce? And if so, how do you structure trade with options?
I do agree that you could potentially see a bounce in the very short term, given that we sold off so hard today, and last week was, you know, May's been pretty tough. But I'm not very optimistic about the markets going forward. We're seeing growth slowing across the globe. And we've had a very good rally since the bottoms in '09, and it's about time that this market pulls back. I don't think valuations are all that great if you take into consideration compressions in profit margins that I would expect to see. Now, as far as playing it right now, on the industrials, we're looking to buy puts out towards September in the industrial sale, the XLI.
So you're expecting that these industrial names trade down from here rather than bounce, as the other guys are suggesting. Todd Horwitz is shaking his head.
Yeah, I think in the short term, yes, there may be a bounce, and that's why the second part of the trade here is what I would do is be selling a put spread on the SPY, the S&P 500, collecting in some premium to offset what you're paying out, because, and I would do that more in the July time frame so that you get a little more time decay. And as we see a bounce, you can make some money on that. But I'm not optimistic about the stock market going forward over the next 4 to 6 months.
You want to sell a put spread on the S&P 500, meaning the S&P finds support, and yet you want to buy puts on some of the industrial names you think they're going down. Yeah. Todd Horwitz, what do you make of that?
Well, you know, I think that, first of all, I don't want to go out to September. I want to know what's going on here. And I think that right in here, we're going to get a short-term bounce, which is going to give you a lot of decay out in your farther-out options. So I'd rather sell into a rally. And I don't have a problem with this philosophy that the market's going to go down. I believe that we're down here at support. I think we bounce up, we get a nice bounce off of this, and then we look for a spot to sell. But I think there's a better way to do it.
All right, 10 seconds, Todd Schoenberger. What's your take here? You shaking your head?
Look, the markets are going lower from this level right now. You definitely don't want to go long, but if you're looking at some select manufacturers, they're there for you.
All right, guys. Todd Schoenberger, Todd Horwitz, and Phil Silverman in New York. We thank all you guys for being